Bitcoin is starting to come down just a little bit, guys. There's a point where the wedge pattern, it's right over here. It's December 18th. So what I'm telling you here is that by December 18th, this chart will either have broken out to the upside or to the downside. That's it, because these lines are meeting over here, right here, and it will force price out one way or the other. Stock market tends to sell off once the Fed starts cutting rates. And the reason you might say, well, I mean, what the heck? Why is it that when the Fed cuts rates, the markets sell off? Don't the markets love free money or low, cheap money? And the answer is this. If the Fed is being pushed to cut rates, we know that there's something majorly wrong in the economy. And there's going to be this fear, just like on the upside, that the Fed was behind the curve. The Fed may be looked at as being behind the curve on cutting.
Bitcoin starts a new week, keeping traders guessing near its highest levels in 18 months. What's next? Experienced trader Gareth Soloway, boasting over 2 decades of experience, delves into chart analysis of Bitcoin and gold. He also indicates a potential market sell-off in the event of Fed rate cuts. Bitcoin price action has held higher after spiking above $38,000 last week, but since then, a testing micro-range has left bulls and bears locked in battle. Bitcoin price slid below the $37,000 mark on November 27th as the bulls struggled to stave off the bearish headwinds. Conversations surrounding spot Bitcoin ETF approval have continued to dominate media headlines. Now the market air is clear. The buzz is for the 4th Bitcoin halving event anticipated in spring 2024. As the year draws to a close, Bitcoin enthusiasts closely monitor the historical patterns that suggest December could be another bullish month for the world's leading cryptocurrency. Central to Soloway's analysis indicates that December 18th signifies an imminent move, either an upward breakout or a downward breakdown. Soloway highlights the contrast. Gold doesn't suddenly plummet by 20%, unlike Bitcoin, which has the potential for such drops. The price of gold rose to a 6-month high on Monday, buoyed by growing conviction among investors that the U.S. Federal Reserve has finished raising interest rates and a weaker dollar. Soloway observes that gold demonstrates consistent strength, possibly targeting an all-time high by the end of the year. Let's move towards the video to understand what this means for markets. Before we get started, subscribe to the channel and click the bell icon for the latest updates.
Bitcoin is starting to come down just a little bit, guys. If I zoom in on the chart, we continue to be stuck in this wedge pattern. I think it's amazing to watch a wedge pattern work its magic. And the reason I say that is because, again, you know, it keeps looking like it's going to break out, and then the level gets rejected over and over again. We've now rejected it 3 times. Now, this is the beauty of the methodology, folks. What I refer to the Winning Trader series is that I want you guys to think about putting the pieces of the puzzle together. So we've now hit 1, 2, 3 times. Remember when I was talking about hitting a trend line, breaking down the door? So we've only hit 3 times. So did you really expect it to break out after 3 hits? And the answer should be no. Probabilities tell us that you have to hit it 4 or 5 times to get a breakout. Same thing on the downside. This is kind of just considered 1 long one, but 2 and 3. So you've now essentially hit 3 on the top, 3 on the bottom, which tells us that it's very possible one of the next hits, either the next one or the next one after that, 4 or 5, creates either the breakout or the breakdown. And again, I think this is so cool to be able to put the pieces of the puzzle together from the last example I showed you over on the other side with this, because you can see how it's working its magic again and again and again. It's freaking cool, guys. Freaking cool. All right. Anyways, so that's where we are at this point. One thing I want to point out to you, if we pull this chart back, there's a point where the wedge pattern, it's right over here. It's December 18th. So what I'm telling you here is that by December 18th, this chart will either have broken out to the upside or to the downside. That's it, because these lines are meeting over here, right here, and it will force price out one way or the other. Now, probably the breakout or breakdown happens ahead of that, but again, I wanted us to just be aware of that. All right, couple other charts to go over, guys. Number one, we got to look at gold here. Gold is pulling back a little off the pre-highs of the overnight, but again, let's go to that gold chart. What I love about this is just its continued strength, right? Here's your pivot high. So far, we're dangling right at that level here, trying to break out. If this breaks out, guys, by year end, we should easily see the all-time high. I do think so. All right, so again, gold continues to be one of my favorites. You guys know that by now. It's one of the, I would view it as one of the lowest risk places to get potential solid upside relatively safely, right? It's not like gold all of a sudden, knock on wood, is going to drop 20%, right? Versus a Bitcoin could do that. As much as I think it's the future digital gold, Bitcoin could drop 20%. In fact, it would be almost unnatural for it not to have a 20% drop at some point in the future.
The sharp sell-off in U.S. 10-year Treasury bonds this autumn has primarily reflected markets coalescing around expectations of a higher natural long-term policy rate, greater inflation volatility, and a shrinking Fed balance sheet. These trends are maturing further. Now, 10-year U.S. Treasury yields are averaging 4.2% over the long term. Soloway notes that the situation is reaching a pivotal moment. It could either shape into a bear flag, signaling a potential downturn, or curve upwards. The dollar extended its losing streak on further bets the Federal Reserve is almost done with its rate hiking cycle. This weakening trend might aid Bitcoin in bolstering its gains. Let's move towards the video to understand more about this.
Looking at the U.S. 10-year yield, which obviously is unbelievably important. And I'm curious to see, Jerome Powell talks on Friday. So there's a speech from Jerome Powell on Friday. I'm curious if the Black Friday strength in sales, does that push him in either direction? If we look at the 10-year yield, I had some key trend lines, right? Trend line from here across, this upsloping trend line. Notice how the 10-year yield fell down and kind of is kissing this area and beginning to kind of move off of it. Now, the question I have is, do we see more of a bear flag where it goes like this and eventually rolls, or does it start to curve up? I would, in general, think this is the more likely scenario based on how far we've come on interest rates. I still think we probably have to come down a little bit more. Now, the bigger question will be is, does that create a catalyst for pushing the markets up higher? Or does it all of a sudden become a panic scenario where people say, oh my goodness, the economy's starting to fall apart, and do we then see rates going down with the stock market? Remember, historically, number one, it's only when the yield curve uninverts, which by the way hasn't happened, that recessions come, historically speaking. And also looking at the data, we also know that the markets tend to sell off, and this is something a lot of people don't know. The stock market tends to sell off once the Fed starts cutting rates. And the reason you might say, well, I mean, what the heck? Why is it that when the Fed cuts rates, the markets sell off? Don't the markets love free money or low, cheap money? And the answer is this. If the Fed is being pushed to cut rates, we know that there's something majorly wrong in the economy. And there's going to be this fear, just like on the upside, that the Fed was behind the curve. The Fed may be looked at as being behind the curve on cutting. Oh my God, they're not doing enough quickly enough. They're not cutting rates enough to stimulate the economy. They're late. They're kind of, it's that whole inflation is transitory. They call it wrong. And the panic and fear comes in. So just remember those key notes on those two factors there, that the markets actually sell when the Fed starts to cut rates. Everyone's so joyous about rate cuts. If it actually comes to rate cuts, what is that telling us about the economy? Dollar-wise, take a look. I've been bearish on the dollar. I continue to be bearish on the dollar. Yeah, you have some supports here, right? We've broken this key level, so we know that that technical level came down. Notice how it came down here and then did a classic retrace to the scene of the crime and then continued on. If I zoom in a little bit here, real quick, just to show you. So here was the consolidation, the breakdown, the retrace to the scene of the crime, and then the continuation there. And I continue to think the dollar probably heads a little bit lower. Your short-term target is going to remain right at this trend line. This trend line is a major trend line. If I zoom out, I'll show you why it's a major trend line, because look at how far back it goes. And for those of you that are wondering what makes a major or a minor trend line, the answer is pretty simple. It's that, very short-term connections on pivot points on the chart are going to give you more minor technical levels. When you go back on the dollar chart to 2021 and you have this pivot low and you connect it to the secondary most dramatic pivot low, what do you think that's going to do? That's going to create more of a major technical level. So if the dollar does fall into this, you should get some sort of bigger, longer, sustainable bounce versus a shorter term trend line. This you could look at as a shorter term trend line. Look at how far back you only had to go. Basically, you just went to earlier this year, right? Right through here, you even chopped through, then you reestablished. Only minor right there. Same thing with this pivot high right through here, right? Only minor there, therefore it broke a lot quicker. That's golden nuggets, by the way, in terms of education, understanding major versus minor technical trend lines.
Bitcoin's price action has tested a narrow range between $37,000 and $38,000 over the past week, leaving traders guessing about the next direction. Adding to the positive outlook, anticipations of a more accommodating stance from the U.S. Federal Reserve in the upcoming year also buoyed Bitcoin's prospects. Such a policy shift could bolster investor confidence further in the cryptocurrency. That concludes our conversation for today. What is your stance? What's next for Bitcoin? Feel free to share your thoughts in the comment section below. If you found this content informative, please give it a thumbs up and subscribe for the latest updates. Thank you for being here with us.